nobody around this week, so this market could just continue literally to drift up this week. It could sell off this week. So, I mean, I really have no idea where the market is. Now, here's what you need to know before the bell this morning. This rally in the market is very long in the tooth. We've now gone 7 weeks straight on this rally. And you know, we've talked about before these buying stampedes and selling stampedes, and this occurs. We get these periods where markets, you know, have a very, very sharp advance, and these are these buying stampedes that we get. And then those buying stampedes are always, not sometimes, not maybe, always at some point followed by a selling stampede, and that selling stampede gets overdone. Markets get really oversold. We saw that here back in October, and that's where we were talking about the rally. You know, we're very oversold. We're going to get a reflexive rally at least, but then we get back into these buying stampedes, and these buying stampedes can last anywhere from 15 to 25 trading days on average, and this one's been one of the longer ones that we've seen in the markets in quite some time. So again, 7 straight weeks of advance. That's great. Good for markets. Always, you know, buying stampedes are always more fun than selling stampedes. But we're getting to the length of that stampede. So you're going to get a correction. Now, whether that correction happens this week, next week, middle of January, have no idea. But the point is that just like, you know, we had a very similar sentiment back in June and July. Investors were like, oh, this market's just going to keep going up all year. And there were, you know, people putting all kinds of crazy forecasts out there. And then you got this 5 to 10% correction. You're going to get a 3 to 5 to 10% correction again at some point in the coming year. That's just the way markets work. So just, you know, this is why we always talk about, you know, take some profits, rebalance risk accordingly. The market's gone very far, very quick. We now have 46% of all the members in the S&P trading at all-time highs. And so that's, you know, a very large number. You're starting to get up there. You take a look at the, you know, kind of a broader market. You've got some of you've got some of the highest percentages of stocks trading at 52-week highs that you've had in quite some time, going all the way back to 2020. Now, that sounds great, right? On the surface, it's great. You have a lot of stocks trading at all-time highs. That's good. Nothing wrong with that, and that is very bullish, but normally when you have very high percentages of stocks trading at 52-week highs, what does that mean? Well, it means you've gone very far, very quick in the markets, and you're going to get some type of correction. They're going to pull back from those 52-week highs. So again, the point here, and again, I don't want to dissuade you, but every indicator that we have is ringing overbought levels, and it just suggests, now again, let me be really clear here. This does not mean the market's about to crash, and this does not mean that the market's about to have a major bear market. Not saying that. What I am saying is that this spike, particularly right here over the last week or so, is a bit extraordinary. You're very overbought. You're going to get some type of correction. So this is a great point. Look at your portfolio, particularly as we get ready to wrap up the year, right? The perfect time for this. You know, stocks that haven't been keeping up with the market, great time to sell laggards. Stocks that have done very, very well, take some of those gains. You can offset those gains and losses for tax purposes going into next year. So again, great time to rebalance the portfolio, kind of get your positions set up the way you want them for next year in the, you know, in the stocks, the areas, those type of things. So again, and again, if you have a lot of cash, I'd be a little bit reticent about buying stuff here, getting a little bit, you know, kind of too exuberant with the markets. You know, we all get excited when markets go, like, oh man, I'm missing out. I got to get in. You're not missing out. You know, the market is like a taxi cab in New York City. One comes, you miss one, there's another one right behind it. You're going to get a better opportunity to put that cash to work. I know I've been repeating this a lot over the last week or so, but this is where we are in the market. So again, just be a little cautious about chasing this market here. You're going to get a better opportunity at some point in the future. And here's the important part. This market could go up more, then correct right back to where we are now, and that entry point will be better then on a risk-reward basis than it is today. That's what you need to know before the bell this morning.